Good morning, ladies and gentlemen. It's time for the Traders Morning Setups with yours truly, Dex, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger reports. And I do hope that everyone is having a lovely, and I do mean lovely, lovely day. It's beautiful outside, at least where we are here, and it looks really nice. It's sunny, it's beautiful, and I'm hoping it's the same thing with you guys where you're located. Now, yesterday I wasn't able to do a show because guess what? Your boy had to run to the dentist, man. I know. Had to do that dental thing. So on mornings where I have things going on, I can't do it. But this is going to be our new thing. As you know, the morning pre market show will be Monday through Thursday. Okay. That's the thing. All right. Real quick, let's get through some of the important things before we jump right in. First and foremost, understand that we have the bull panel is back. Monday evening bull panel is back at 8:30 p.m. Eastern Standard New York time, and that's going to be every Monday. You don't want to miss that. That's what we'll have on special guests. We'll have myself will be there. Sometimes Frank will be there. Sometimes HK Trader extraordinaire will be there. Sometimes the moderator of all moderators will be there. And you just never know who you may see. So you definitely don't want to miss those. Also, webinars. All right. So we've brought back the power of Team Dex. All right. And we've scheduled that for Wednesdays at 11 a.m. and on Thursdays at 11 a.m. How to use the Traders Morning setups in your trading. Yeah. Now, the only thing about it is you got to register to join these, and the links should be in the video description below. In addition to that, we have the appreciation sale going on. I want to say thank you to everyone who wished me a happy birthday this past weekend, and to show you my appreciation and love for you. What do we got here? Well, 1 year pro membership for only $697 over a 40% discount. And also, you can lock in the monthly pro rate of $99. You can lock that in right now before those prices go up, and they will be going up. So you definitely want to take advantage of those. All right. So the next thing that we need to talk about now is what's going on in the markets. What happened last night? Well, that's what we're going to take a look at right now. All right, so bear with me just for a second here, and we'll get right into that. I'm still learning how to use all these tools, so bear with me. I may be a little rusty. All right, so as you can see here in the overnight market, we have the US dollar index just bullying the markets right now. We're now at the 107 handle. All right. We hit 107.21 in the overnight market. I warned everybody that 108 was the target that the dollar was going to try to push toward. And here we are. And this is causing the euro to be down 19 pips at 105.08. Yes, ladies and gentlemen, the euro broke into the 104 handle in the overnight markets, hitting 104.94. Pound sterling down 23 pips at 120.88. And the Aussie just didn't have it, the staying power. It's down 56 pips. It's 63.26. Getting dangerously close to hitting that 62 handle. Not looking good. Bitcoin, a lot of profit taking up here. Down 550 on the futures. We're at 27,600. Did pop up to 27,805 in the overnight market. And we're just off the lows of the morning session at 27,490. Looking at the Ethereum futures, down 20 and a half at $1,659.50. Oil No longer in the 90s. We are at $88.30 a barrel after bouncing off the overnight low of $87.76 per bushel. I did warn about the $80 support. That is where the market is headed. We'll see if that can hold. If that $80 support holds, then the next leg up should push oil past the $100 a barrel mark. Nat gas is trying yet again to do something. We're at $2.88. We hit $2.90 in the overnight market. It's trying to get back above that $3 mark as we're heading deeper now into the fall. You got gold still getting hurt. It's in the hurt locker. It's at down $5.80 at $1,841.30 per ounce. It did dip as low as $1,831 per ounce in the overnight market. Silver, 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 high ho silver, no high low silver. Silver dropped to $20.86 in the overnight market. We've now bounced off those technical lows to $21.22 per ounce. I warned you that $20 what was going to be gunned for, and I still think that we have the potential to drop between $18 and $19 an ounce before the market finds some sort of support. So I warned you, right? I told you so. Copper. Dr. Copper down 4 at $3.60. Dow futures dropped as low as 33,453 in the overnight market. We've now bounced from that to 33,484, down 154 points. The E-mini S&P 500 futures down 26 and a quarter at 42.98 and 3/4. The NASDAQ 100 futures down 114 at 14.68 and a quarter. Russell down 12.6 at 1758.9. And we got soybeans down 9.5 cents at $12.67 a bushel. Corn down 2 cents at 4.86 a bushel. And wheat is up actually 8.25 cents at $5.73 per bushel. And that is a look at the overnight market. So what do we got going on in the news to move these markets, albeit the nighttime market, or what can we expect in this day session? Well, let's take a look here. Well, did you know there's a new way to shop? That's right. Shopping on Amazon is about to change. The retail giant is overhauling its search bar with ChatGPT-like features that'll act as a sort of concierge for customers, offering expert answers and product suggestions. Dubbed Project Nile, Amazon's top leaders, including CEO Andy Jassy, view the new search bar as a top priority. Set to be launched in January, Project Nile aims to improve the customer experience and drive traffic and sales. Eugene Kim, Insider's chief tech correspondent, has all the details on what one executive described as a super confidential project, including details from internal documents and a town hall meeting for employees. The plan is Amazon's most significant push into leveraging generative AI, an area the company has been scrambling to take advantage of over fears of falling behind competitors like Microsoft. However, Amazon's overhauled search bar will arguably be the most impactful implementation of generative AI for big tech for consumers thus far. Most U.S. online shoppers, about 61%, start their product search on Amazon. So, what do you guys think about that? How will Amazon sellers try and game the new search bar? Third-party sellers are a huge part of Amazon, accounting for nearly a quarter of the company's $514 billion in revenue in 2022, according to e-commerce software maker Jungle Scout. Incorporating an AI-backed search engine leads to questions about the steps third-party sellers will take to ensure their products are more likely to be recommended. So everything still goes back full circle to getting recommended. How do you get recommended? Well, keywords. So the issue is not about how do you get recommended. The issue is how do you not get recommended? What is the AI going to do? How is the AI going to determine winners and losers? Because that's what it is. You're playing now a chess match or a game of chance where you're rolling the dice. Where the AI is gonna predict and pick and choose winners and losers, but there must be a rule-based way to do that. So I think it goes back to pay to play. Whoever gives Amazon the biggest cut of their profits will be the ones most likely to appear at the top of the list in the recommendeds. It's just the course of business, and that really hasn't changed. So there's something to think about. Well, before the opening bell, as we know, young Wall Street executives detail lessons learned from their mistakes. We asked this year's class of Wall Street rising stars about some of their biggest mistakes, from why not all advice is worth taking to the importance of taking your time. How bad was September for stocks? Well, September was the worst month of the year for stocks, traditionally speaking, with the S&P 500 falling 5%. And sweeping on the financial advice, plenty of TikTok videos offer tips on what you should do with your money, but experts recommend treading carefully. You don't think. Everybody with a computer is now an expert, right? Well, in tech news, New York's top VCs, according to other top VCs, more than 60 influential investors based in the Big Apple, writing checks to startups of all stages. The list includes Bain Capital Ventures, Matt Harris, and Cowboy Ventures' Jillian Williams. Was based on recommendations from fellow investors and investment data. No VC, no problem. Melissa Kwan has launched multiple startups over the past 13 years without venture capital. Doing so meant she could live a life that favored happiness over maximizing profits. You don't say. She detailed why she's a big proponent of avoiding VC money. Google co-founder Sergey Brin rallied the troops. Brin hyped up Google's AI work in a surprise appearance at the tech giant's monthly all-hands meeting. It's just a very profound time to be alive and to be part of this technology revolution, Brin told staff, according to a recording heard by The Insider. In business news, the days of big social media platforms could be behind us. We're entering a new era of social media where users are opting for smaller online circles instead of all-encompassing networks. But don't worry, the great social media splintering could produce a healthier online environment. I don't buy that. There will always be trolls, and there's no way to prevent that. Anyone who wants to be a troll can be a troll. They can hack, they can get past your security. They know how to trick your algorithms. They can do all types of things. If somebody wants to get at you, they're going to get at you. Las Vegas' newest venue looks pretty incredible. U2 was the opening act for the Sphere, which features the largest LED screen in the world. Wall Street seems to agree with Sphere's entertainment, stock soaring as much as 17% on Monday. Trump in court. Former President Donald Trump appeared in a Manhattan court on Monday to defend himself in a $250 million fraud trial. During the lunch break, he made a dramatic speech outside the courtroom door, accusing the judge overseeing the trial of getting away with murder, and interfering with an election. Meanwhile, Trump and his family denied responsibility for fudging Trump organizational numbers in a previously unseen deposition video shown at trial. And in other news, at Rosemead High, generations of students were harassed or groomed for sex as they tried to get an education. Matt Gaetz is seeking to oust Kevin McCarthy as House Speaker. Beyonce's Renaissance World Tour is getting the Hollywood treatment. A new dating show that was recently added to the streaming service Max has some people up in arms. Generation Z workers have no problem telling their bosses what they're doing wrong or discussing compensation. An 8-foot tall pumpkin named Lewis from Target is the new hottest decoration Halloween fans are obsessing over. Microsoft's Jaron Lanier, considered the father of virtual reality, said the rush to advance generative AI tech could be corrosive. Prominent healthcare VC Seven Wire Ventures just raised $217 million with an eye toward backing later stage startups. And Sam Bankman-Fried, haven't heard that one in a while, right? Reportedly considered paying Donald Trump $5 billion to not run for office in 2024. Speaking of Sam, the jury trial for the FTX co-founder begins today. Prosecutors say Bankman manipulated funds to defraud depositors and investors of the collapsed crypto exchange. The 18th annual BET Hip Hop Awards will be held in Atlanta tonight. Cardi B and 21 Savage lead 12 nominations each. And the MLB postseason kicks off with the American League of National League Wild Card Series. The Houston Astros, the reigning World Series champions, have a bye to Division Series. So that's the news that's going on this morning. Not as if you really cared, but hey, I had to put that out there. You know, we got to see what's going on. That's how you are able to do what you do, is when you can understand what's happening and see what's happening out there. And that's why we do what we do. You just have to know. I'm nosy. I need to know what's going on. That's just me. You know, what can you say? All right, so there's a bunch of news all over the place. Not all the news is relevant, as you know. A lot of things I don't talk about because I don't think that it's relevant. I just don't. So I don't deal with it. I think, you know, there's informational overload right now, but I try to focus on important matters, not, you know, foolishness, as is the you know, the custom of many in the sphere that we deal with. I want to talk about the reality of living in the United States of America in 2023. I think it's safe to say that life in America has never been more unaffordable than it is right now. And I'm sure many of you would agree with that. All right. I think that we have to deal with the realities that are before us. Now, if you just think about it, I'm sure most people are affected. Of course, some people are more affected than others, depending on geography and a whole bunch of list of factors. But our standard of living is being systematically destroyed. For a lot of years, many Americans didn't fully understand what was taking place because it was happening so slowly. You know, like the boiled frog analogy. You know, you boil the frog slowly, and by the time the frog figures out it's burning up in here, he's already cooked and on your dinner plate, right? But now we have reached a stage where the purchasing power of our money is collapsing, and the cost of living has become exceedingly painful. Now, to borrow, excuse me, a phrase from my daughter, when we talk, she compares not just the collapsing buying power of the average American, but also the moral collapse. And she refers to it as being morally homeless in America. We have a lot of people who are physically homeless in America, but did you know we also have people who are morally homeless in America? They have a do as thou wilt mentality, and you have so many people addicted to drugs, addicted to pornography, addicted to lying, addicted to stealing. My wife pointed out something to me as well. Did you know this is a very secret addiction that many people don't want to deal with and talk about because it doesn't affect that many people, but it does affect some. And that is being addicted to being pregnant. Yeah, being addicted to being pregnant. Something to think about. We'll save that for another day, but I just want to throw that out there as far as the addictions that we're dealing with. What up, Big William? What up, man, in the live chat? What up, what up, what up? All right, now back to what I was saying. The cost of living has become exceedingly painful. Thanks to our rapidly rising cost of living, the middle class is becoming the impoverished class, and the poor are increasingly being pushed out into the streets. Now, I'm going to take it a step further and say that there is no middle class. It's either you are part of the 1% or you're poor. Now, the definition of poor will depend on your understanding of where the economy is. All right. There are those that have deceived themselves into believing the government narrative that we are not in a recession, and in no way, shape, or form will we ever be in a recession if the Federal Reserve has anything to do about it. And then there's the reality folks that say we are in a recession, and then you can even argue that we're in a depression because of X, Y, and Z. Now, unfortunately, if we do not find a way to turn these trends around, it won't be too long before we have tremendous societal turmoil on our hands. And we already do. The smash and grab phenomenon, to think of one. And that's happening all over the country. It's not just an East Coast or a West Coast thing. It's happening everywhere, where mobs of people come in and bum rush a store and relieve it of all of its inventory, or a large portion of it. And it's not just clothing stores, it's grocery stores too. They bum rush a 7-Eleven, grab a bunch of stuff, even knock over shelves and stuff, and then run out the door, get in a bunch of cars, and drive off in different directions. Just something to think about. Did you hear about the woman who found a receipt from Burger King that was dated August the 10th of 1986? And at that time, you could buy a Whopper for $1.54. Today, that same Whopper will cost you $6.79. Yeah, that sounds about right. That sounds about right. Because the cost for the Whopper for Burger King at that time was probably like 25 cents, 50 cents tops. Yeah. The fast food places, their costs, their profit margins are so ginormous because, a large fry may only cost 5 cents for them to produce. And then they charge you $4. Now, a woman has been left stunned after discovering a retro Burger King receipt from the 1980s, which reveals the staggering price increases that the fast food chain has implemented over the past 4 decades. US-based Eliza took a social media post to share the receipt after her mother found in a box the garage while they were remodeling their home. The faded paper from the fast food chain dates back to August the 10th of 1986 and lists three Whopper burgers purchased at $4.62, which works out at $1.54 each. A single Whopper burger currently costs $6.79 in today's money, over 4 times the price listed on the vintage receipt. In other words, if you had $6.79 back then, you could buy 4 Whoppers and you would still have some money left over. This is what inflation does, folks. It destroys our purchasing power. Another woman named Melanie that makes $34 an hour is so stressed financially that she literally tries to make 1 loaf of rye bread last year for the entire week. Now, pause for a second here. She makes $34 an hour. Back in 1986, the minimum wage was $3.35 an hour. All right? She's making 10 times more money than you would have made at minimum wage in 1986. And yet she feels poorer and more stressed out than she felt in 1986, making $3.35 an hour. That's how much price destruction she has faced. She states that what she started doing is she buys a loaf of rye bread and she works really hard to keep that 1 loaf of rye bread lasting the whole week. She stated that she eats peanut butter, so she'll eat peanut butter toast whenever she's hungry. Now, in the old days, if you were making $34 an hour, you were living the high life. You were considered upper middle class. But now most people making $34 an hour are just barely scraping by from month to month. Of course, it isn't just food that has become absurdly expensive. At this point, homes in the US have never been more unaffordable than they are right now. Check out this post from Twitter by Kobesi Letter. It states that inflation adjusted home prices are now 85% above their average dating back to 1900. 85% above their average. That's ridiculous. Even after accounting for inflation, home prices have never been more expensive than they are right now. In fact, inflation adjusted home prices are now 20% above their 2008 peak, and that was the previous all-time high. The median home now sells for an alarming, get this, 530% of the median annual income. Meanwhile, the median house payment is now a record 49% of median pre-tax income. Sorry, affordability has never been worse, no matter what you say. We have never seen anything like this in the entire history of the United States. Since the beginning of 2019, the median price of a home in the U.S. has risen by more than $100,000. See, people thought that 20 years of money printing by the Federal Reserve and the U.S. Treasury wouldn't hurt anything. But we're starting to realize really fast just how much damage it really is doing. In fact, comparing present prices to levels before the virus pandemic, St. Louis Fed numbers show a median price U.S. homes rose from $313,000 in the beginning of 2019 to $400,000 today. Rental prices have gone completely nuts as well. If those who are listening to me right now who rent, you know what I'm talking about. The median asking rent now in the United States is over $2,000 a month. Over the past couple of years, we have seen unprecedented rent hikes, and vast numbers of renters have been getting the boot. In fact, we are seeing a tsunami of evictions in the Los Angeles area right now. With COVID era protections gone, the number of renters facing eviction in Los Angeles continues to climb by the thousands each and every month. From February through the end of August, approximately 50,000 eviction notices were filed by landlords in the city, according to figures released on Monday by the LA Controller's Office. A spokesperson said 96% of them involved non-payment of rent, and landlords were owed $186.5 million collectively. So, where do all these people go? If you evict 50,000 people and you already got homelessness in California over the 100,000 mark, where will all these people go? If they're young enough, perhaps they can live with their parents. But many will not have that option. And so you're assuming that the family structure in the United States is still intact. But because of the destruction of families in the United States, family is not even an option. Even if your parents live in a 5-bedroom house and all 5 bedrooms are empty, minus the one they sleep in, going home is not an option. Now, up to this point in 2023, homelessness in the United States has been rising at the fastest pace ever recorded in U.S. history. And a lot more Americans will find themselves without a home between now and the end of the year. Meanwhile, those that are scraping by will find it harder and harder to make ends meet. The average rate of interest on credit card balances has risen from about 16% in February of 2022 to more than 22% today. As a result, an increasing number of Americans find themselves unable to keep up with their payments, and it is being reported that credit card losses are rising at the quickest rate since the last financial crisis. Credit card companies are racking up losses at the fastest pace in almost 30 years, outside of the great financial crisis, according to Goldman Sachs. Credit card losses bottomed in September of 2021. And while initial increases were likely reversals from the stimulus, they have been rapidly rising since the first quarter of 2022. Since that time, it's an increasing rate of losses only seen in recent history during the recession of 2008. It's far from over, too, according to the firm. More Americans are going bankrupt as well. In fact, the number of bankruptcy cases just in August, this past August of 2023, was 18% higher than it was in August of 2022, a year ago. Millions upon millions of Americans have been turning to debt in order to keep up with the cost of living. But as economic conditions deteriorate, financial institutions are starting to get much tighter with their money. So we're moving into a time when U.S. consumers will find it much more difficult to take on new debt. That's right. They're going to make it harder for individuals to be able to get loans and increase their debt, but the U.S. government can increase its debt ad infinitum. Nearly 60% of the respondents in the New York Fed Consumer Expectations Survey said it's harder to get credit cards, it's harder to get mortgages, and other loans than it was a year ago. It was the highest level since the New York Fed started the data series back in 2013. Another Fed survey of loan officers reveals their fears aren't unfounded. Banks reported that lending standards tightened across all consumer loan categories and all categories of residential real estate, or RRE loans. Meanwhile, the number of banks reporting tighter standards for credit cards rose by 36%. So you thought they would just tighten their standards for mortgages, but no, they're tightening their standards for credit cards as well. Banks have also significantly tightened standards for business loans. This is a recipe for disaster. Without a doubt, this is certainly off the chain. And there's no way to go back. You cannot go back. In fact, the rising price of oil is going to cause enormous inflationary pressures throughout the entire economic system in the months ahead. A senior market analyst at OANDA, or ONA is how I like to say it, warned that it appears that nothing is going to get in the way of this oil price rally. It looks like nothing is going to get in its way, said Edward Moyer, senior market analyst at ONA. In emailed comments on Tuesday, energy traders know a bullish trend when they see it, and it will not take a lot more than a strong dollar, softer Russian ban, and weakening demand to disrupt this rally. When the price of oil reaches $100 a barrel, that will be painful. But we can handle that, so they say. But the chief executive of Continental Resources is projecting that the price of oil could eventually reach $150 a barrel. That's Doug Lawler, chief executive of Continental Resources, the shale drilling giant controlled by billionaire Harold Hamm, telling Bloomberg News that crude prices are set to remain elevated and could press to the $120 to $150 a barrel range without new production. More price pressure is coming, he said, unless policies are put in place to encourage more output. If the price of oil reaches $150 a barrel and stays there, it will be an unimaginable disaster for the U.S. economy. And the cost of just about everything will jump substantially to catastrophic levels. That's because just about everything that we buy and sell has to be transported. We need cheap energy in order to have a high standard of living. But unfortunately, the era of cheap energy is coming to an abrupt ending. And that means that none of our lives will ever be the same. Heed the warning, folks. This is calamity waiting to happen. And it will happen. And there's nothing you can do about it. So something to think about. Something to think about as we're moving forward with these markets. A lot of the markets have already moved into strong bear market selling positions. And there's no way you can doubt it because the markets tell you what's happening. You still have selling pressure in the Dow, selling pressure in the S&P 500, selling pressure in the NASDAQ, and selling pressure, excuse me, in the Russell. All right? Hasn't changed. Not even a little bit. And now you have selling pressure in gold, selling pressure in silver. Where are you going to go? Selling pressure in copper. They're taking away all of your avenues of escape. Something to think about. Something to think about as we move forward. All right, folks. So that's our show for this morning. Not going to hold you long. Just something to think about. All right. Remember all the things I've said. And don't forget, the links are in the bottom of this video description. You definitely want to take advantage of what's going on because, like I said, I believe that the only avenue left for most people to even be able to make a living is going to be benefiting from the price action in these markets. And we show you how to do that at postwavetrading.com. Not to mention, for some of you that work a job and you don't have time to trade and invest, get at me at postwavetrading.com and we can talk about the service that we offer where we can trade for you on your behalf. All right. Postwavetrading.com. And with that being said, remember, keep it here for all of your pre-market news Monday through Thursday. Peace out. Enjoy the rest of your day. And thanks for listening.